And you guys, Ken at Tortoise Capital, nightly strategy and weekend strategy podcast for January 26, 2024. Start with the hybrid swing portfolio. So we're on 30-minute charts, starting with Alcoa. This blue box is our 5-day price box. This yellow box is today's price action. Yesterday's SSC exited here after it peaked and then rolled over, came back to the VWAP, exited on 1 unit of risk. It's about 3R and no overnight risk. AI, this was continuing to decay. When it crossed back into the dragon, I shorted. Risk box to the Bollinger Band mean is also the standard risk. It really didn't do much. It kind of ground out half an hour and no overnight risk. Caterpillar, this was a COTA 2 continuation after the opening bar. It continued to go up above the VWAP, above a rising dragon, above a rising PSAR. It ran up to 303 and then decayed for a scratch. I thought about shorting here on the PSAR flip, didn't take it. It would have paid off. Cliff, emerging dragon. It breaks above the top of the PSAR here. Standard risk. Ran all the way up to 1880. I took a VWAP exit to lock in about half an hour. CVS gapped up and then started to fail. It was below the Bollinger Band mean, so I was ready to short. Standard risk, and then it scratched. I thought about the reversal here when it crossed the Bollinger Band mean. It didn't take it, would have paid off. DIA, nice gap up and then continued to go. It was more than a risk box above the Bollinger Band mean, so I took it. It ran all the way up to a new all-time high. It came back to the skin of the dragon, exited with 1R. Disney, emerging dragon on a gap up, settled for 1R at the skin of the dragon in the usual way. Devon Energy, emerging dragon, rolled over for a scratch. After it sold off to here, but then held, I looked at the 1, 2, 3 entry, which is really an entry that looks like, it had a nice sell off. And it gives me the rising lows and comes back to the skin of the dragon. So if I'd been short from here, that would have been the natural exit for a short because now it's starting to look to the long side. That's why I consider that a reasonable long side entry. And then you would pick this standard risk box. That's the same as this one. Everything is above the Bollinger Band. Would have paid off. Maximum favorable excursion of about +1. I didn't take it though. Still studying that idea. I like that idea of after a downward move, if you were short, that would be your dragon skin exit. That now becomes a reasonable entry location. Oh, they wore me out at soccer tonight at 21,000 steps. Emerging markets, no trade. Ethereum was a gap up. And then in the second bar of the day, it was a continuation. So standard risk, it ran up. It peaked at the RL10 right here. I took the skin of the dragon for 2R. EWW Mexico, emerging dragon continuation pattern, standard risk, 3R after it rolled over and came back and hit the dragon. Mexico, well, that was Mexico. This is Brazil. I tried, it was a gap up and then started to fail. I tried the short and scratched it when it came back to the VWAP. I thought about the reversal here when it crossed back above the VWAP and turned to summer. I didn't take it. It would have paid off. That was the theme of the day. Intel, big gap down, huge gap down. So I know it's in play. So there's the close. Here's the big gap. And now it's in play. When this whole thing kept giving me lower highs and it crossed back through the VWAP, I shorted on the rebound at the skin of the dragon, cashed 1R. IP, a gap up and a rollover, and it hit the skin of the dragon. I'm short with a standard risk to the high of the day, essentially. On the reversal, I take the skin of the dragon for about 1.5R. Held support at the rising Bollinger Band mean. So that actually sets up an interesting possible COTA 2 for next week. IYR, no trade. Coca-Cola. Yesterday's very orderly SSC, which closed well right here, continued to run up. And when it came back and crossed the VWAP, I exited for 2R. I really like that series of 2 trades. I mean, wow. That's worth taking a screenshot. I really like that one. Just as a, indicator that they all look the same leaving the market or leaving the station. KRE, no trade. McDonald's, another beauty. Lapsing dragon right by the numbers, short with a standard risk box. That's in the second bar of the day, and it went below the low of the day. That's the lowest risk entry ever. And it sold off all day and then reversed. I took the skin of the dragon exit for about 4R. Beauty. Merck. Emerging dragon for half an hour. VWAP exit. Microsoft, no trade. Marijuana, no trade. Nike, gap up and go. An emerging dragon, standard risk. Peaks at 103.30, comes all the way back to the VWAP. I exit for 2R. NVIDIA, I tried a 1-2-3 entry and scratched after the morning hook. Clean energy, no trade. There was a short side trade available. Not much, but it was there. Rivian, tried the COTA 2 continuation and crossing the VWAP and the testing the Bollinger Band main, but it scratched. The S&P ran up and then ran all the way back, sort of a just tactical going nowhere Friday. Treasury, same thing. Tesla, it was a gap up and then a marginal decay all day, so that's really in a state of depression. Walmart, oh, beauty. You should listen to yesterday's discussion of Walmart too. Because we got 2 positions into this thing yesterday, and then in the last half hour, it closed all the way up to here. So we had a nice buffer, and then it gapped up and then continued. So I added a 3rd position, and all it did was continue to just gain, and now it's up here. So we've got three positions in. One, two, three, four, five, six. This one is 6R. That one is 3R. This one is 2R. So we're holding 11R on three positions, and this thing is really poised to go. Walmart. US Steel tried the collapsing dragon short out of this sideways quiet channel and lost half an hour. All right, sniper trades of the day. So these are 3-minute charts. First one is Ethereum note, ETHE. There's the close. This featured a big gap up. Here's your OR3. There's the breakout. Standard risk. Looking to go long. Entered in the middle of the dragon after the R10 peaked for about an hour. Caught a 2 continuation after the Bollinger Band mean catches up and everything gets a nice tight compression. By the PSAR breakout. Exiting for 3R. So that's a total of about 4R on ETHE 3 minutes. Walmart 3 minutes. So you will recall that we had two swing positions in on this one, and it closed really, really well up here. It opened, here's the OR3. It breaks out to the upside. That's the only direction I'm interested in. There's our risk box. Here's that rising Bollinger Band mean indicating how strong this trend up is. Comes all the way back. I probably held it too long because I believe in it so much. So I get about a 0.2 at the VWAP. Caught a 2 continuation when it crosses back above the Bollinger Band mean. Grinding. Exits for 2R. So that's about a 2.2. Grinding was good for us yesterday in Walmart. It's good for us again today. Okay, this one is McDonald's. Also 3-minute charts. So the Bollinger Band mean is down. You get a peak of the R10 here. You have base in the R10 there. You have another R10 peak here, but that's a lower high. So now you feel like it's coming to a head. That makes this any break there a collapsing dragon. There's the PSAR flip. I'm ready to front run that a little bit, and we'll call that a out of 2 or supported fall crossing. So we're short with a risk box up to the PSAR flip. Checker hold. second position on a next collapsing dragon. Ace-R flip exit. So this one's 3R. That one is 2R. So that's about a 5R collapse out of that pattern. Love that one. What makes that price level so strong is you get that double bottom in there. And then the declining highs. So it's common. There's a time series in there. When you have that kind of decay in that amount of time, it better vote which way it's going to go. Much south. George's 3-minute emerging dragon. Nice work. Nice work. On this one, what I want to say is on the third trade. Now, I want you to notice you got the VWAP here, and you're getting short here, which I like because it's got the lower highs and it's breaking here. That's the same trade you just saw me take in the other one. That thing is supposed to fail right away. When it doesn't fail and crosses above the Bollinger Band mean, I like that exit right there. Just cut it. I mean, this is still not bad, but I just say, look, this is supposed to work right away. When it doesn't, something else is going on. Then I'm thinking, well, maybe this could go all the way back to here, like it did from this price level. So if I exit here, maybe I can play that trade if I want. Now it didn't work, but that's the way I'm thinking on that trade. Reasonable effort, good exit. I like the stop and reverse. You gave it a chance to run and it just didn't move. Same thing here. I like it. All these trades that we're seeing here are like failed emerging dragon breakouts. Those are not optimal, you know, because you're buying it right at the point where it failed last time. I mean, what's better is off of this turn inside here because you're catching it when you have that sine wave, what you're thinking is it can do this. So now I've got to be able to buy it in the bottom third of that. If I can buy it in the bottom third or right in here, then I've got 1 and then 2 units of reward just to the top of the channel, which is what this thing did. This is a good exit because you're cutting it right there. And now this is Fisher cut bait time, except it was already 4 o'clock. So that's going to set up a nice bracket move for next week. Is it going to do this or is it going to do that? If it breaks down, this is a support level. That's really just a gap, even though it was trading in here. That move it gapped up and then ran through there. So there's hardly any support in there. The next support is all the way back here at 290. So if this fails, 290 is our downside target. And if it breaks through 288, look out below. Good, a good scratch or good trim on that was not a scratch, it's a trim. Same here, failed breakout. Failed breakout. I like the stop and reverse short. I think that's the right way to go. It just didn't follow through. It was kind of a quiet day in the financials. Same. Same, same, and same. All failed breakouts. Satya. So this is the story is now finding the movers. Here's one AMD. This is the fifth day in a row AMD has been a mover. Big gap down to here, sells off, and then starts rocketing up. So he buys it, ends up scratching it, moved pretty fast. Sells off, it gives him a kata two and a PSAR flip. This is actually an SSC, and his wrist box is like this. Cash is 2.5. It rolls over. He tries this, playing it to aim back to here, gets a scratch, re-enters, then it gets paid as it comes back to the VWAP. Notice how the VWAP acts like a magnet. This was a failed breakout, so he cuts it right away, gets short when it crosses the VWAP, smashes it for 1.2, missed the SSC, which would have paid, gets it as it crosses the Bollinger Band mean and the PSAR. I love it. It just scratched. Then he gets this one, trims it quick, misses the re-entry, but that could have paid. But all told, 3.6. That's nothing to sneeze at. And brings in 3.3 in EWW. He doesn't stay wrong long. This is a reasonable short. That's a nice stop and reverse, by the way. Upon failure to fail and holding and then crossing the VWAP and a PSAR flip, take a look at your rule set. That should be, we could be hitting that, but you at least got the kata two, and that returned 4R and missed this one and that one. So that's a pretty good day at work with a suboptimal and a losing trade, a suboptimal entry, a late trade, and missing two big moves and still walking home with 3.3. That's why I love EWW. It's a great trading vehicle. Jonathan trims his loss here quick, gets a fractional win here on the collapsing dragon, which is fine. On this one, he gets that big. I like the layout on this one because you can really see how that dragon just dominates as an indicator. It is so smooth, and the turning points are crucial. This is where the RL10 crosses the simple moving average 10, because remember the dragon is a Bollinger Band 10 period plus or minus 0.5. So the spine of the dragon is a 10 period simple moving average. And the RL10 is a 10 period regression line. So both of those are looking at 10 periods. It's just the RL is so much faster to adapt to changing price. But this is where the fast one, which went so low, it reversed and crosses the slow 10 period moving average, and you get that kind of a almost a moving average crossover in that sense. They're both based off the same 10 period look back, and the RL10 is fast, and the Bollinger Band mean is slow. The other thing that maybe allows you to get in just a fraction earlier is when it reverses. Now this one is when it enters the Red River, so that's not bad. That's really quite good. The earliest you could possibly think would be like here. Fractional price improvement. But given the size of the risk box, it's the difference between those two entries adds up over time. And I think that's it. I'll take a quick look at the reports. Bullish normal, strongly overbought, except for a slight pullback the last couple of days. Risk off for volatility, strong bullish price action. This is compressed volatility ready to drive price in a sharp move in either direction. Market got a little bit stronger as all the indexes are now above their 4-month moving average. These are the winners going into next week. Now we'll do the blended monthly rebalancing next week. And basically what it is saying is it end up replacing real estate and Latin America with diamonds and the US large caps as an example. The 3-day bars up, up and away. This is cleared. That's really strong. Then this one is where it cleared the previous all-time high. That's as strong a vote up as you can get. It just went into the summer, and it's just leaving the Red River on the MACD signal line. So this is really as good a technical condition for the next leg up as you could get. See, we're peaked at the 150-day high. Small range day. There was no evidence of panic selling. You can see the leaders in the clubhouse here for the momentum-based blended monthly rebalancing. Qs, Diamond, Spiders, Russell. And XLK and XLF are both better than the NASDAQ. Huge moves in IBM, Verizon, and AXP this week. Got to find those movers. I guess all the money left Intel and went over into IBM. Qs and the SPY are the two strongest. SPY is better than the globals. So SPY at 67 is better than the Euro Asia blend at 57. Weakest are emerging markets and Asia less Japan. The US is strong, tech sector especially strong. Mixed bag in Asia, mixed bag in Europe. Mexico, clear winner in Latin America. Tech and finance leading the way in the business sectors. I'll leave it for your attention. Shift to the daily for Monday. Dow tactical summary. Still got a good number of auto framers that test out well. A 551W in Coke. Two triple screens here in Goldman and McDonald's. Nice big breakout in Merck on every time frame. Also, micro breakouts here in Verizon. Walmart with a 10-day and a 30-day new highs. I love Walmart here. A low range day, so you end up getting a lot of dojis in the ETFs, metric ton of auto framers. Breakout to the upside in DIA in every time frame. A reasonable bump up in oil and energy starting to recover. Lots of auto framers to choose from. Tesla, 3M, and Intel, all looking good. Handful of squeezes, including 3M, Tesla, Coke. I like that. Mostly strength today. The leaders continue to lead: AXP, Walmart, Merck, and energy sector coming on strong. And finally, the frog list. The usual suspects are still in there. The RL30 is starting to roll up. The R10 still has some room to go before it becomes extreme, so that's reasonable. And the 90 is sort of in a tactical pause for a moment. It can still go higher, but this is already kind of in nosebleed area. This is, if it just failed right here and the whole thing just rolls over, this would still be an extraordinary move, which is what you're seeing reflected in the RL90. It's just telling you what is obvious from the charts, and that is this has been an amazing move. So don't count on it continuing, but don't be surprised if it drifts higher. That's that's a good problem to have. I like the early warning that the crossing of the RL30's z-score and the RL90's z-score represents outperformance and then crossing back under to underperform. And it got bad enough that it pulled the 90 with it. And then it reversed higher with like a caught a two in here. And the RL90 has bottomed out there. That's the most important chart in the whole set. Tactical caution, but there's actually room next week for some more short-term growth because you have the RL10 Z score is sloping up, but it's not at an extreme condition. And the RL30, if it finds support here and goes, that would be very strong. So there can still be a nice, 2% bump next week without it being too much of a statistical anomaly. But, to be honest, we are kind of at the 2 sigma frame for an amazing move up. All right, that's everything for today. Get storytelling tomorrow morning, foundations Sunday morning. Take good care. Oh, I should also say the those audios and discussions of the foundations book are really quite good. Definitely worth your attention. Take good care. See you tomorrow.